Hi everyone, good to have you in class. This is E Plus Academic Resource Center where we take online tutorials for undergraduates and senior secondary students, okay? All right, quickly, today we're going to be looking at correction of errors in financial accounting. Just like I said before, this topic has been a bone of contention for students, okay? But somehow it's the simplest in financial accounting, one of the simplest subjects, okay? So today we're going to demystify any mystery, okay, that is associated with this topic. So please pay key attention, stay to the end of the class, invite people to be part of what we're doing, share this video so that other people can see it and be part of what we're doing, okay? Please pay key attention and take down notes. Bring out your pen, a notebook, take down something. It's practical. We're going to practicalize everything we're going to do here today, okay? All right. In the part one of the class, I have discussed to some extent what we need to know. So we're going to continue. This is a part two. And also the part one of the class, I attached a description of a video of a class that we are supposed to watch before this. And that class is classification of accounts. You can't be correcting errors if you don't know if you don't know about classification of accounts. You must know classification of account before you can correct errors. Very important, okay? Like the error of principal and one other errors talks about classification of account. So if you don't know, you might have a challenge with that, okay? So watch that video before starting with correction of errors, okay? So now, there are 5, let me start from, we stopped at suspense account in the part 1. So this part 2, we're going to continue from there. And now, before we get into a practical question, there are things I need you to understand, okay? Now, before correcting an error, there are steps you need to take, okay? There are steps you need to take. Number 1, I need you to take down notes. Number 1, identify the kind of error, okay? Identify the kind of error. If it's an error that will affect the trial balance or error that will not affect the trial balance, that's number 1. Step number 2, identify the 2 accounts involved. Now, if it's an error that will affect the trial balance, okay, you have one account and a suspense account. One account and a suspense account. If it's an account that will affect the trial balance, remember, when suspense account is involved, that means that error affects the trial balance, okay? But if it's an account that will not affect the trial balance, suspense account is not involved. So you have a normal account, that is a normal ledger for correcting the errors. But if it will affect the trial balance, you have a normal ledger 1 and a suspense account 2, because 2 accounts must be involved. Okay, 2 accounts must be involved. Then number 3, identify which account is to be credited and which one is to be debited. Definitely. Correction of, in fact, posting and entries in general, it's all about double entry principle, where you have where a debit entry must have a corresponding credit entry. It's all about double entry principle. So one must be debited, one must be credited. So you identify which one must be credited and which one must be debited. Now, I need you to also note that under this, when we talk about debit and credit balances, debit and credit balances, okay, every debit entry, debit balances, in fact, okay, you debit assets and assets and expenses or income. Then this credit is liabilities and what? Gain or receipts. A debit balance for debit entries or debit balances are assets and expenses or liabilities. Then credit balances are assets or expenses or income, expenses or not income, expenses or payments, okay, expenses or payments. While here you have liabilities and gain or receipts. For instance, if I say plant and machinery, is plant and machinery a debit balance or a credit balance? First of all, plant and machinery, what kind of, is it a real account? Yes, it's a tangible asset. It's a real account, or you call it non-current accounts or non-current assets, tangible assets. So they're having, every asset has what? Debit balances. So if I say creditors, for instance, creditors are people you are owing. So it's a liability. So it has credit balance. So all creditors have creditors here, or payables. You call them creditors or payable. They have what? Credit balances. Okay, so if you know which account to debit, which account to credit, or which account has debit balances or credit balances, it will help you enough. And I've outlined them here for you. Credit balances are liabilities, income, or liabilities and gain or receipt. Debit balances are assets and expenses or payments. Payment, for instance, purchases. If you make purchases, it's not payment, it's payment. So it's under where it has debit balances. Sales is sales and income. Yes, when you make sales, money comes in. It's an income. So it has what? Credit balances. Are we together? So the next step is what? You illustrate the errors. It illustrates how the errors occurred, and you draw up your ledger to correct the errors. After doing that, then you post your what? Your journal. Do you understand? Then you post your journal. Now, there are two things. We can, okay, that's the end for the steps, okay? There are 5 of them. Identify the errors, check the 2 accounts involved, check if the accounts have debit or credit balances. Then you what? You illustrate the errors by drawing up your ledgers. Then you post to what? The journal. These are 5 simple steps. Now, we are going to solve a question. Now, sometimes there are 2 instances. Now, let me be clear with you. There are 2 instances. You can correct errors before the final accounts are drawn up. What we mean final accounts, we mean like the subsidiary books, the ledgers, and the financial position of the business. You correct the errors before final accounts are drawn up, or you correct the errors after final accounts have been drawn up. That is, after you have drawn up everything, you have your balance sheet and everything, your trading profit and loss account, you have drawn them up. Then you now see some errors. Then you start correcting it, or you correct before the final accounts are drawn up. Are we together? These are 2 instances. So we are going to solve the instance where before the final accounts are drawn up. That's what we are going to be focusing on today. Then subsequent class, if there's still time, we'll do solve another practical question when after final account has been drawn up. Are we together? Now, there is something else I need you to understand. I've mentioned it before, I'm still mentioning it again. Now, correction of errors thrive on double entry principle. You must know the double entry principle, very important. Okay. And secondly, accounts that will affect the trial balance must pass through the suspense account, while accounts that will not affect the trial balance will not pass through the suspense account. Please take note of all these things I'm saying. Okay. Then lastly, after the final account has been drawn up, okay, any correcting figure or any correction that will affect the nominal account. Now, when we say nominal account here, we mean income or expense account. Income or expense account, they are the nominal account. So any entry or any correction that will affect the nominal account, okay, will affect profits. This is after final account has been drawn up. Your trading profit and loss balance sheet and all that, after they must have been drawn up, okay? Then any correcting figure that will affect the nominal account, that will affect either the expense or the income account. The expense or income account are nominal accounts, okay? Any correcting entries there that will affect them will definitely affect profit. Either they will increase profit or they will reduce profit. Do you understand? Now, when a nominal account is has a debit balance, when the correction is debited, the correction now has debit balances. It will what? It will reduce profits. Okay? It will reduce profit. But if it has a credit balance, okay, it will increase what? Profit. Because automatically credit, receipt and income, okay, receipt and income already have a debit balance or a credit balance, okay? So when your correcting figure is affecting your correcting figure has a credit balance on your nominal account, it will increase profits. But if it has a debit balance, automatically it will reduce profit, because even the debit balance, okay, even the debit balance of your what is it called? Even expenses and payments has debit balance already. So any entry that has a debit balance, any of your correcting entries that has a debit balance, okay, will reduce profit. I don't know if you get it. Now, this is what I mean. When you have your, maybe this is your income account and this is your expense account, okay? Now, this is your debits entry and this is your credit entry, for instance, okay? So when your income account has a debit entry, definitely your income will fall, okay? Your income will fall and your profit will fall as well. When your income account, income here is, for instance, sales account is an income account, okay? So when your income account has a debit balance, now check this debit column here. This is expense and payments, okay? There's no, see, income is a credit balance. Do you understand? Income is a credit balance. Gain or receipt or income is the same thing. It's a credit balance. But when your income account has a debit balance, that means it will affect your profits. Your profit will fall because your income will fall. Because income is supposed to have a credit balance, not debit balance. But in this case, when your income has a debit balance, your income will fall and your profit will fall. Then when your income has a credit balance, your income will rise and your profit will what? Your profit will rise. Do you get it? Now, the same thing for expense. When your expense account has a debit balance, okay, your expense what? Your expense will rise and your income will fall. When your expense has a debit balance, your income will rise and your expense will rise and your income will fall. But when your expense has a credit balance, your expense will what? Your expense will fall. And your profit will rise. Profit will rise. Okay, when your expense has a credit balance, okay, your expense will fall, then your profit will rise. But when your expense, okay, has a credit, credit balance, but when your income has a credit balance, okay, your income will rise, your profit will rise as well, sorry. So this is just an analogy. After final account has been drawn up, this is what will affect profit. Definitely it will affect profit because your final account has been drawn up. Are we together? So we're going to solve a practical question now. Please, we may not finish it in this class, but I need you to pay key attention and pay close attention, okay? All right. So I've drafted a question here, okay? I'm going to share this question so that you can see it. I'm going to share it on the comment section of our Facebook page. I think I'm going to share it on screen here so that you can see it as well, okay? So just follow me, all right? Now, it said the trial balance of E Plus Limited showed a difference of what? 622 naira, okay? And this has been carried to the credit side of a suspense account, okay? Further investigation revealed the following errors. Number 1, purchase of an adding machine for 750 naira was debited to office expense account, okay? Now, remember the steps I gave you to correct an error. Number 1 step is what? Identify the kind of error. Identify the what? Identify the kind of error. Are we together? Now, number 1, purchase of an adding machine for 750 was debited to office expense account. Now, number 1, the steps I gave you, identify the kind of error. What kind of error is this? This is error of principle because the wrong class of account was what? Debited. Purchase of an adding machine is an asset account. Adding machine is an asset account. Then office expense account is a nominal account. Office expense. So the two accounts involved here are asset account, or let the name of the assets is adding machine. Adding adding machine. Okay? Then the second account here is what? Office expense account. Office expense account. These are the two accounts involved. So, number one, the first step, identify the kind of error. This error of principle, because the entry was made in the wrong class of account. This is asset account. This is nominal account. You see why I told you that you need to go and visit that video to see the kind of how we classify accounts. I think the first or second video. So I will share the link so that you can go and refresh your memory. This is a nominal account and this is an asset account or a real account called real account. This is a real account. Okay? Are we together? Yes. So this is a wrong class of account. So this is error of principle. Okay? This is error of principle. And the two accounts involved are adding machine account, office expense account. Then, will the error affect the trial balance? No. Error of principle will not affect the trial balance. So let's show the error. So this is what happened actually. This is what happened. This is adding machine account. Adding machine account. This is office expense account. So this is what happened. Look at what the error that was committed. Let's analyze the error. Okay. Adding machine, they say purchase of an adding machine for 750 was debited to office expense account. Now, the bookkeeper or the accountant is supposed to debit adding machine account because asset has debit balances. Adding machine is an asset. So all assets have debit balances. So the accountant is supposed to debit adding machine account, but the accountant went and debit office expense account. So how much? 750. Okay? So this is the error. The accountant is supposed to debit this account. He went and debit this one. So what do? We have to move this money to adding machine account. So this is the error now. So how do we correct the error? So this is how we correct the error. Are we together? So we have adding machine and we have office expense. Now this error, this is why it will not affect the trial balance if it is maintained like this till the end, because assets and expenses. Assets and expenses have debit balances. Adding machine is an asset. Office expense is an expenses. Even though the accountant made an error to record this money under office expense, it will not affect the trial balance because both expenses and assets have debit balances. So if it is maintained like that to the end of the entries, it will not affect trial balance because the entries, the two accounts have debit balances. I don't know if you get it. Expense and asset have debit balances. So since the error was here, instead of debiting this one, you went and debit office expense and you maintain it like that, it will not affect trial balance because both expenses and assets have debit balances. Okay, so let's correct the error. So 750, all you have to do is what? You credit, this is debit side, this is credit side. Adding machine, 750. Then this is credit, right? You credit office expense with that amount, 750. Then you debit office expense, you debit adding machine with office expense, 750. So this one will wipe off this one. This one will cancel this one. So we have 750 left here on that debit side. So we have returned that 750 to adding machine account. Are you seeing what I'm doing? We have returned the 750. All you have to do is just credit the office expense so that this 750 will wipe off this 750. Then we'll have the what is it called? The 750 return back to adding machine. Are we together? All right. Let's continue. Then number 2. Discounts allowed of 784 naira have not been posted from cash book to ledger. Now, what kind of error is this? First of all, this error will affect the trial balance because you only posted in cash book. You didn't take it to their respective ledger. Discount allowed of 784 naira have not been posted from cash book. That means it was posted in cash book, and what it was not taken to the ledger of discount allowed. Remember, in the cash book, you don't balance discounts. On the debit side of cash book, you have discount allowed. On the credit side of cash book, you have discount received, okay? But you don't balance each other, just like you balance cash versus cash, bank versus bank. But you don't do that with discounts. You don't do discount allowed versus discount received. You just total them, okay? You just total them. So the accounts involved here are discount allowed account, discount allowed account. Then since it will affect the trial balance, it will pass through the suspense accounts. These are the two accounts involved, okay? So this is the error. This is the error. Discount allowed. We are analyzing the error now. This discount allowed account, okay? So in the cash book, discount allowed is what? On the debit side of the cash book. But the bookkeeper or the accountant didn't take it from the cash book to discount allowed account. That is an error. Partial posting, okay? Partial what? You can call it error of partial posting or error of one-sided posting, okay? That's an error. It will affect the trial balance. So it has to go through the suspense account, okay? So now, discount allowed is an expense, okay? So it has debit what? Balances. Assets and expenses have debit balances. So discount allowed is an expense. So it has debit balance. So the error here is that the accountant or the bookkeeper didn't enter that money here. It's supposed to enter that money here. Supposed to pass from the pick it up from the cash book and post it here on discount allowed account, but you didn't do that, okay? So we have to correct it by opening our what? Suspense accounts. Are we together? So what do we do now? So we have discount allowed. Okay, let me read again. Discount allowed 784 have not been posted from cash book to ledger. Are we together? So you come here. Are we together? And you come here, suspense account. Suspense account, how much is it? 784. Then you come here, discount allowed, 784. We have corrected it. This is the correction. The one I did earlier was to identify the mistake, the error. Then we have corrected it now by posting the money. So this is number 1. This is number 2 of the question. Please make sure you're putting these things down, because at the end of it, what I'm going to do, we are going to analyze first. After analyzing the errors, then we are going to post them to what? We're going to post them to their respective ledgers, okay? We are going to post them to their respective, sorry, we are going to draw up, what does the question say? The question says, you are required to show the journal entries necessary to correct these errors, then suspense account. So, due to the space of our board, what we're going to do is, we'll pick I think we have up to like 10 of them here. So we are going to analyze them one after the other. Then after that, we'll draw up the journal, then draw up the suspense account. So please, make sure you are taking down notes, because as I'm working, I'm going to be wiping them off. Okay? All right. So the class is becoming too long. So I'm going to stop here for now. Then we are going to continue in the next class as part 3. Okay? So please, take the class seriously, okay? Wherever you don't understand, use the comment section, ask me questions, and I'll be more than glad to answer you, okay? This is just the beginning. We have just answered only 2 of the questions, okay? So we are going to continue in the next class. I don't want the video to be too long, and I don't want to rush you. I want to take it gradually. Are we together? All right. Thank you for staying to the end of the class. Share this video, invite people to be part of what we're doing, and let's grow together and learn together. All right. Have a nice day.